All right, it is time for the TrendSpider Chart Roundup, and I cannot do that. I need to bring on not Jake from State Farm, his older, cooler, better-looking cousin, Jake from TrendSpider.
Hey,
what up, man?
What's up? Let's do another round of charts today. Looking forward to it. Got a lot to look at. It's been it's been an interesting week to say the least. But what's cool about this is we've already touched on a lot of these charts from last week, so we get to go back and see what worked, what didn't work, and all that good stuff. So I have quite a few to go over, and if you can see my screen, let's jump right into it. I think you can.
We see you. We're good.
All right, you can see my screen, you can see my face. Let's do it. So, all right, everybody, thanks for joining today. Let me pull up the chat on my phone real quick just so I can follow along with everybody. So essentially, what we're going to look at today is really just so I can follow along with everybody. Hold on. So essentially, what we're going to look at. I have the live stream on my phone as well to look.
That's the old call radio trick, man. When you call onto the radio station, you got to turn the radio off.
I know. I've done this before, so sorry about that. Anyways, let's jump right in. So let's start with SPY. I mean, we always need to look at the broad markets to see what's going on here before we really kind of dig into some of the individual names. But one thing I want to point out pretty right off the bat here is just the fact that we are pretty overextended. And that's after 4 very strong weeks in the market. I mean, pretty much from late March to last week, we went straight up. And, one thing that's been really evident is the fact that we are starting to trade above this monthly Bollinger Band. And these are actually weekly candles. So we're overlaying the monthly Bollinger Band onto the weekly candle chart and just making that whole thing a lot more efficient, easier to look at. So in this case, you'll see that anytime that we've really been outside the upper Bollinger Band on the monthly side of things, we have had pullbacks. Now, what's interesting is over the last, pretty much since the election was over, we've really been popping above the upper Bollinger Band on the monthly side of things, pulling back and just continuing to grind up. So that is something that is a little different. And that's something to keep in mind when we are looking at this instance here where we are above the upper Bollinger Band here. But we're kind of seeing what you'd expect. We're seeing a little bit of a pullback, and who knows, this could become bigger. We'll have to see what happens. I mean, it's honestly healthy for the market to pull back a little bit here. So all in all, you can see that we are definitely showing signs of possibly even taking out last week's low, which would be something to I don't want to say get bearish on, but definitely something to keep in mind. Now, one thing I also want to point out here is TNX, the 10-year yield. Everybody was just talking about that constantly over the last month and a half and trying to find a reason for why the market was dropping. Now, what's interesting here is TNX has kind of been pulling back, and that's right in line with the market continuing to move up. But you'd think that these growth names would maybe catch a little bit of a bid with these longer term rates starting to decline, but that's not what we've seen. We've seen growth names continue to get absolutely smashed, even though the 10-year is down from its highs, down about 11%. So will growth kind of lag this down move in yields? We'll have to see, but that is something I wanted to point out because that has been such a interesting piece of information. A lot of people have been looking at, the 10-year is here and growth names and all that, and we are pulling back. So that's something I wanted to point out. But also on the broad market side, and this isn't just SPY, this is everything at this point. DIA, this is the Qs especially. We have a gap below. So if we turn on the gap snake, which is just the automated gap detection, you'll see here that we have a gap below, and you can see that here by just by seeing this yellow area. Now, what's also interesting is the fact that where we bounced today was right where we had mentioned, there's some volume holding here. So what I did was I anchored the volume by price, and we talked a lot about this last week. What I did was I anchored the volume by price from this March pivot point. We did a video on this today on TrendSpider, and you'll see that this was an area where the trend really continued to move up. This is where we put in a low and then continued to make new highs. And if we do kind of move down from here, this gap below would be a potential target. Now, we bounced today, and you'll see that this area highlighted in green, this volume node here, was an area where a lot of people got back to break even. And we like to talk about this a lot because there's this fallacy in the market that, you bounce because buyers step in, or you drop because sellers step in. That's not always the case. In this case, we likely bounced today because one, there was a lot of people holding here, a lot of shares holding, and that, who knows how many actual people, but there were a lot of shares, a large amount of shares within the 411 to around 411.75 area. And so what happens is you bought last week, or however many people bought shares at this level last week. Price moved up, they were doing pretty good. Price starts to move down, they start selling. There's some selling pressure because now a lot of people have profits. And then as this first layer of shareholders from last week start to break even, they're not selling like they were up in the 416, 417 area because they don't have any more profits to sell. So this is a great example of us really bouncing hard right at this volume node, which highlights where a lot of people are back to break even. Now, the thing is, these levels are not guaranteed. These are just short-term areas where price will likely catch a little bit of a break. Now, if we continue to move down into tomorrow, this area that I'm highlighting orange, there's not a lot of shares holding below. So if we continue to break down, this could move very quickly through 408, 407, all the way down to around 406, 405 even. And so we'll have to see if that comes to fruition. Now, the market generally doesn't like to close red more than, really 3 days in a row. If you look back on, anytime we've had a pullback, generally 2 to 3 days is the max amount of days that we have red. And then, sometimes you'll have a bounce and then a pullback again. But 3 red days in a row is not incredibly common for the market. So, it wouldn't shock me if we did have a little bit of a bounce into tomorrow. And that's something to pair not only with this volume node right here that we bounced off of, but if you go to the seasonality, and if we go to, let me remove the analyst estimates and go to seasonality here. Since 2021, the beginning of the year, you'll see something really interesting. You'll see that Wednesdays are actually the best performing days in the market since we started this year. So if we go to the day of the week seasonality, you'll see here that, and actually Thursday is caught up with Wednesday. Wednesday and Thursday are historically the best days in the market. And it's not shocking to see that Tuesday is the worst day, performing day in the market. So that's kind of right in line with what we saw today on SPY. And we do have a little bit of an uptick for Wednesday and Thursday. Now, 67% simply just means that there's a 67% win rate for Wednesday and Thursday since 2021 started. And that means that we closed green versus the previous day's close. So Wednesday having a 67% win rate means that Wednesday has closed green versus Tuesday's close 67% of the time since this year started. So we do have a little bit of a technical setup here. We also have the seasonality setup here that does show a little bit of bullishness on the sentiment side and historical seasonality side going into the middle of the week. But it's also important to note that we do have this this gap below. Now, what's nice on TrendSpider, just right click, create an alert at this gap. So whenever the gap comes close to even filling, or maybe price is just starting to enter the gap, you can go in and you can put an alert at the top of this gap and be alerted that we're starting to enter that area. So in this case, maybe you don't even use sensitivity. Sensitivity is essentially something that you're able to add to an alert area, which creates this buffer zone. So you'll see here that this area gets bigger and smaller as I move it right to left, and this purple zone gets bigger. But if you just simply want to know when the price starts to enter that gap, you may not need seasonality at all. You can just use the breakthrough trigger here, which means that the price has to actually break through that line. And so you'll see if I move this all the way to the left, there's no more purple area. And you'll see that it's pretty easy to create an alert here and know when the price is starting to get within this gap zone below. So that is how you can do it. One thing I'll mention on the alerts, make sure that you make your alert confirmation candle as low as possible. If you have the daily confirmation candle here, you're not going to get the alert until the daily candle closes. And who knows, the gap may have filled by then. So the 10-minute confirmation candle means that the 10-minute candle is closing. And then as soon as that close happens below this line, you'll be alerted, and you can still look at the daily chart, but get that intraday alert. So big level to hold tomorrow is around 411.50. If we break this volume node, you don't have a lot of volume below until around this 407, 406.50 area. So definitely keep that in mind. If we anchor a VWAP from this this area here, it's almost right in line with the top of this gap. So, even if we did break down through this little shelf below, the anchored VWAP is right around 403 to 404. But remember, as the price continues to close above this line, this will continue to slope up over time. So really the main areas to watch would be around 406.50 and then right around 404, which is the top of the gap, and this anchored VWAP below. And the anchored VWAP is simply just the volume weighted average price that we're measuring from this March pivot point. So we'll see what happens going in tomorrow. QQQ is an interesting one because the Qs have quite a few gaps below, and you'll see here that the Qs are actually opposite of the SPY, where Wednesday is the worst performing day of the week so far in 2021. So Wednesday only has a 40% win rate. So that means 40% of the time Wednesday closes green versus Tuesday. And if you remember, Wednesday for SPY was a 67% win rate. So if we remove the volume by price here, you'll see that there's quite a few gaps below, and this is just using the gap snake, the automated gap detection on TrendSpider. So not only do we have a gap below, we're going into the weakest day of the week so far in 2021 from a seasonality perspective, and we'll definitely we'll see what happens going into the middle of the week. But notice that Thursday and Friday do have an uptick in seasonality here with 60 and 64% respectively. So, is tomorrow a capitulation day before reversal? We'll just have to see. But same thing with SPY. The Qs really don't close more than 3 days in a row with some type of bounce. I mean, look here, back in March, we had 3 really strong days. We have a bounce. So, it's really hard to get more than 3 red days in a row without some type of bounce. So just keep that in mind. Now, one thing that I want to point out here is the fact that if we look at the VIX was something that we were talking about last week. And what we were talking about really for the VIX was the fact that, the S&P 500 was hitting these newer highs, yet the VIX was kind of flatlining here. Now, the last couple of days, we did actually hit a new low, so that's something to consider. But for a while there, we were hitting, these kind of higher highs on SPY and kind of just flatlining on the Qs, on the VIX. So if we go to SPY and we compare these to like we did last week, you'll see here that we did have these higher highs on SPY, and we were flatlining here. Now we did have, this final kind of capitulation day here to the upside on SPY, and we did have a new low put in place. But all in all, we really didn't hit, that much of a new low here. And so that was something to keep in mind, that, the VIX was starting to kind of stabilize a little bit when we talked about this last week. And, who knows, this could simply just be a couple day pullback, which would be healthy at this point for really the overall market. And who knows, growth names may finally catch some type of bid, or people will just stop selling. Half of the, as I mentioned, half of the equation sometimes is just people, not selling anymore. And that can help price stabilize as well. So the VIX, we did fill this gap above on the VIX. It's really hard to do a lot of technical analysis on the VIX, but it is interesting to note that we did fill the gap. And then, a couple weeks ago, we did finally fill that gap from February of 2020. So gaps are something to keep in mind, even on something like the VIX. Now, going into another case study on the monthly Bollinger Bands with the week well, in this case, this would be the daily price action with the weekly Bollinger Bands, but still using that multi-time frame analysis. You'll see here that if we do overlay the Bollinger Band, and we'll change this to the weekly, this is one that has really materialized pretty nicely. So last week before, or late the week before, we were talking about this area where Facebook had made a huge move to the upside, and we were finally starting to get above this weekly Bollinger Band. And you'll see that anytime we've really done that in the past, this definitely has been an area that that has been a little bit of a red flag zone. Now, could we easily pull something like this where we just had a little bit of a pullback, got back in the upper Bollinger Band and continue up? Absolutely. And that's something to definitely keep in mind. Now, the one thing I would keep in mind is starting to look at the weekly candle into Thursday and Friday. Remember that the weekly candle still has quite a few days left to do its thing on a Tuesday. So I wouldn't necessarily start looking at it now, but I do want to make a note that, even the weekly candles are pretty close to the upper part of the monthly Bollinger Band. And anytime we've had that in the past or got close to it, this has been a longer term move down, or at least slight, pullback. So here. Now, notice here that we did just melt up in 2020, but remember, this was kind of when the market was in a little bit of a different state than it is now. But really, anytime that we've really had that, we have had at least some type of pullback. So something to consider as well. This is when you want to start looking at the longer term side of things, especially as the month is starting to come to a close. We don't have a ton of trading days left in the month of April. So it is always good to start looking at some of these longer term levels, especially if you're more of a swing or position trader. So that is Facebook, just an example of being able to use that multi-time frame analysis. And another thing we talked about last week was the volume shelf on IWM. The way that you can add the volume shelf on any of these charts is simply by going to indicators, typing in volume by price. The volume shelf is simply just a part of the volume by price that's kind of created by using the anchored volume by price. Now, something I'll point out here is the fact that we do kind of have a pretty defined head and shoulders here. So we've got our shoulder, got our neck shoulder here, and we're starting to kind of break down. Here's our head. So, something that is worth noting, but these can easily reverse and validate this setup. But the area I would be looking for below would be right around this, this zone, rather than just in one exact area. So this still has quite a bit of room to move down before we really started to break down through these important levels. But if we do highlight this area with a horizontal line below, and we show what the price is, this is right around 205.91. Let's just call it 205.95 or so. Or as I mentioned, you always want to have more or less a zone. So anywhere from around 205.50 to 206.50 would probably be an area to keep in mind. And you'll see here, even this wick below is right around 204.75. So you could even, have, let's say 204.75 up to 206 as your breakdown level. And this is the nice thing about the alerts, is you can just go in, create the alert, and you can add sensitivity around that line. So you don't have to create multiple alerts. You can just create one sensitivity alert, and you can go in and watch the price from there if we did continue down. So we'll see if this does materialize, but not what I'd call the most bullish pattern here. And another example, we were talking about the volume shelf last week, and I'm not going to sit here and say the volume shelf or any pattern or setup works every time. Here's a great example. Last week we were talking about how the price pulled back right to this volume shelf. I think this was actually on Tuesday when we were talking, we did have a little bit of a move up, but we're starting to break through it again. And so that just shows that you're not always, these volume shelves are not always going to make or break price. They can easily break down. It just means that a lot of these shares now are starting to hold at a loss. And if people start selling at a loss, they can add to the supply, and this volume shelf isn't as relevant. So the volume shelf using the anchored volume by price is very powerful, but it is not something that works every time. And you definitely should be using other indicators and other ways of looking at the market rather than just this one thing. So IWM, we'll see. I think we did have a slight gap here. If I turn on the gap snake, I think it's too small, honestly, but I can kind of see it visually right here. There's this very small gap that did fill today. There was a little bit of one left, and so this finally did fill all the way. If we turn on volume, let's see here, quite a increase in volume. So that's something else to keep in mind as well. This was not like a light volume day by any means. So will we continue to break down? We'll just have to see. But if we do anchor a volume weighted average price, you can see that we definitely did break down through a pretty important level here using the anchored VWAP. Now, going into some of the crypto side of things, we were talking about this last week. Crypto attempted to kind of do its thing and break above the 62.5 area, and it did very very temporarily. But we are starting to catch a little bit of a bid here again. Now, this is an example where Bitcoin's really not respecting very obvious areas. So if we went and, let's say, anchored a volume by price from, let's say, this swing low in January, the price is holding this volume shelf, but you can see that we did kind of get into this area above, this kind of gap in liquidity. So if we did break down again, even though it looks like a pretty strong daily candle, this would be an area where the price could break down pretty quickly, and that's all the way down to around 48K. So keep that in mind. We are technically still right on the volume shelf. If we anchor a VWAP from this low here, you'll see that this is literally right in line with this volume shelf here. This would be a very strong area of interest below if we did break down into the coming days. Now, as I mentioned, this is kind of when we want to start looking at the longer term side of things, especially going into a new month, the month of May. Now, one thing I'll point out here is just this measured move that I made on the fib side of things. We just measured the move from the 2020 highs, the 2019 highs, and then anchored to the March 2020 lows. That creates the measured move. And you can see that this 5.618 extension has literally been resistance now for months. And we attempted to break through it last week. We did not actually break through. Pretty ugly candle, pretty big outside candle here. Really, this candle took out the previous 2 week ranges. So if we do break below this low here around, let's say 52, that may bring in some more selling. I've even seen the sentiment change a little bit on FinTwit on the crypto side of things. Some pretty bullish people that I follow have kind of mentioned it would be good to have a pullback here. So the one thing I wanted to bring up here on the longer term side of things is this seasonality. So if we look at the month of the year seasonality, and we look at pretty much seasonality since the 2017 highs in December, you'll see that May is not necessarily the strongest month. Only a 33% win rate for May over the last 4 years or so. So keep in mind, or 3 years or so. So not a ton of data here, so keep that in mind. But we do want to start the seasonality from a point in time when we had a strong reversal, which is the previous bull market before we reversed. Because if we started the seasonality since the 2020 lows, we would barely have a year to look at. And at that point, the data is really irrelevant. So at least going back, since December of 2017. We have a couple years to get an idea. Now, if we do start this from, let's say, 2015 or so, you'll see that May and June kind of have 67% win rates, just like April. So July and August, though, looking back, are historically horrible months for Bitcoin. So keep that in mind. I mean, even if we go back since 2017, you'll see that August has a 0% win rate. And that's definitely something to remember going into kind of the latter part of the summer. Ethereum, I think, has the exact same win rate here going back since the 2017 highs. Let's see. Yeah, no, I guess May has a 50% win rate since since December of 2017. So yeah, you'll see that, since the 2017 highs, Ethereum has had a 33% win rate from May to August. So not what I would call the strongest part of the year that we're going into, but you can see that, Ethereum's looking pretty strong here. This 8.618 extension is the area that you could watch above. I mean, the measured move is right here. This is the big move. And when you don't have any other price action to look at or compare to, I mean, look, the highest we hit in late 2017 or early 2018 was right around 1,400. So we don't have any other pivots to look at. So we need to use these extensions because a lot of people use 0.618 extensions. And so, I personally kind of like to use this bigger measured move here for my extensions, and they've really been respected pretty strongly over the last I would say a week or so. But if you look at kind of where these other extensions are, the price has respected some of these areas as well. Next one is Litecoin. LTC had quite a big pullback, like everybody did last weekend, but this was pretty exceptional. You'll see that we're kind of stuck here right around 263. We were at like 325 last week before we had that little that blip in the radar. But all in all, I mean, we haven't even hit the 2017 highs on Litecoin. So I think we were talking about this last week that this could easily be a laggard for the market in general. So for the crypto market, because Bitcoin's already broke through its 2017 highs, Ethereum's already broke through its 2017 highs or early 2018 highs. And so is Litecoin the next one to do that? We'll just have to see. I mean, if we look at the weekly chart, the monthly chart, we've had 7 months of green in a row. And you'll see that, we had 6 green months in a row back in 2017, 6, and we continued up for quite a few months. And what's interesting is we actually topped out a little earlier than we did in, some of the other ones, because Litecoin just absolutely blasted off. And so that's something to, consider when you are looking at this. Just because you have 6 green weeks in a row doesn't mean that this is due for a crash. It just means that buyers are very much in control. But notice that, April only has a 33% win rate. So, seasonality is not something that you say, oh, there's only a 33% win rate. This is definitely going down this month, but you do want to use it as a variable in the equation. Now, going into our friend Dogecoin, which I'm sure Wujastyk Kraken, I'm sure disappointed a few people today because we are at 29 cents instead of 69 cents or 42 cents for those that have this weird obsession with 42 and 420 and 69 with Doge. Definitely not a strong day. I mean, whoever had a lot of Dogecoin, I'm sure loved this 420 day as a way to get liquidity, because I'm sure there were a bunch of retail traders that believed in whatever reason that Doge was going to 69 cents. You sell into that, and retail traders definitely got hit pretty hard on Dogecoin going into the rest of the week. I mean, this is a pretty ugly candle here. Now, if we do remove this fib level and just look at the overall price action, this is still up huge. I mean, this is kind of crazy how much this is up. And you can see here, we had a really ugly candle here, and we continue to move up after that. So, just because there's an ugly candle doesn't necessarily mean anything. It just means that you definitely have to keep in mind some of these previous lows that price may take out. But all in all, Dogecoin was just one of those ones that a lot of people were thinking 420 was going to be a special day, and it's done nothing but absolutely tank today. Let's see. Yesterday it was at 42, and now it's at 30. So quite a move down. You definitely have to have a stomach for Dogecoin, to say the least. Naresh Mara, yeah, I mean, if you are not in crypto and you want to play, kind of have a proxy to play crypto, your Maras, your Riots of the world, those types of things you can kind of play in the stock market that do move with crypto. Could you look at CHZ? I'm not even sure what that is. Is that a crypto, I guess? Yes, it is. What is this called? CHC, that's what it's called. This one has definitely made quite a move, even bigger move than Dogecoin. This is impressive. I'm not sure what the market cap is, but some of these market caps are just getting out of control on crypto. I mean, Dogecoin being more valuable than some of these huge names in the stock market is definitely something to kind of think about when you are looking to invest in something like this. But hey, I'm not a financial advisor. If you want to trade it, great. If you want to hold it, great. I just think it's crazy that these market caps are just so out of control. If you want to call it this, we have a very slight volume shelf here. You'll see that this big block of gray here pretty much is showing that a majority of shares are really holding down here at like 2 to 3 cents. So there's a lot of people with a lot of profits holding this right now. So the more people that are holding profits, the easier it is for them to sell if things start to turn. So that's just something to keep in mind, especially when using the anchored volume by price and seeing there's a lot of volume holding below. The price can definitely pull back relatively quickly because so many people are holding profits. And as soon as everyone starts selling, that adds supply onto the market, and you definitely have quite a strong pullback. That's a good question. How is Ripple doing? XRP USD. We'll look at it on Kraken. 138. This chart looks pretty strong, honestly, on the daily candle. If we anchor the volume by price from, let's just say, the December lows here, you'll see that, and this is what I would not call, my favorite setup. Notice that you don't have a lot of volume holding up here. It's pretty much flat. Now, you could easily, over the next week, have a bunch of volume come in, and a volume shelf could kind of form here. But for now, there's not a lot of volume supporting price up here, and that's something I don't necessarily love to see. I like to see price kind of trading at one of these big volume areas where you've got a couple volume nodes kind of at this price. So that's that's definitely something to consider with Ripple. Ripple is one of those ones, kind of like Dogecoin, where there's not a set supply like Bitcoin. It's kind of like diluting a biotech stock, and that's kind of what's scary, holding your Dogecoins of the world and your Ripples of the world going into too far in the future. But decent setup here. What I like to do sometimes anchor the VWAP from the breakout point here, and you'll see here that that's exactly where the price is kind of holding. So if we create a zone right here at this breakout point, notice how the volume weighted average price is right where the price has caught a bid or simply supply dried up because the average price per share paid since this breakout is right at this level. So a lot of people are back to break even, and supply could simply just be drying up at this point rather than a bunch of buyers stepping in. But for now, it's holding relatively well, and we'll have to see if this level holds going into the rest of the week. But yeah, definitely one of the better looking charts out of the ones we just looked at. And this looks relatively similar to Bitcoin. I mean, Bitcoin's got a decent daily candle right now. BTC USD Coinbase. So yeah, pretty much the same candle here. But keep in mind that these candles can change very quickly, and it's funny how these moves generally happen at the end of the kind of the midnight end of the evening in the US, where not a lot of people are watching the charts. Andre, what do I think about Doge? I mean, I don't trade it. I think it's awesome. A lot of people made a lot of money, but it's just, it's not something that I would get into, especially as a long-term hold. But hey, I'm not a crypto expert. I just like looking at the crypto charts and seeing the same patterns that form across, all asset classes. So that's kind of my thoughts there. So we did go over quite a few, cryptos. So let's move on to more of the stock side of things again. One thing I want to do before we move into some of these requests is simply look at some of these 420 names. I think a lot of people thought that that with it being 420 and everyone's got it's weed day, all that in the US. That maybe we'd have a big move in weed stocks, and that was definitely not the case. GRWG is one that actually had decent news today, and still just couldn't get through any type of selling pressure here. So if we go to the news, which our news on TrendSpider is actually from Benzinga, you'll see here that Grow Generation did expand into Michigan. Generally, you'd think that's decent news for the company. Instead of having any type of move up, we broke 2 new lows over the last couple weeks. So, the marijuana stocks did not have any type of correlation to it being 420 today. That is for sure. So that's GRWG. But I mean, across the board, I don't think there were any marijuana stocks that had any type of good moves today. CGC absolutely tanked. I think it was down well over 5% at one point today, and it looks like it closed near the low. One thing I'll point out here is that we did fill finally this gap from late December. So you'll see here, I just turned on the gap snake, and you'll see that this gap finally fully filled last week, and or maybe that Friday before last week, and you'll see that we just continue lower. So we really don't have any more gaps below until we get to, let's say, around 2150. So that would be quite a move down. I mean, that'd be another 20% or so move down, maybe a little less. But if you were looking at possible gaps below on CGC, this would be one right around, let's say, 2150 to 22. So weed stocks are definitely not looking great. This is something that I think a lot of the price action was looking at news that was already baked into the price, maybe for years at this point. I mean, it doesn't happen overnight to legalize weed in some of these places that have legalized it, and this could create more businesses opening as competition for some of these weed names that are kind of well known. But classic TA kind of stuff, we literally rejected almost right at this previous high, and it's pretty much been nothing but down from here. Next one that we'll touch on is Tilray. I mean, as I mentioned, most of these look very similar. They all look absolutely horrible. So no green, at least in the stock market, for 420 for any of these names. We'll take a couple requests now. Actually, last one. I want to talk about IIPR. This is one that is a little less on the marijuana side of things as far as growing. This is more of like properties for marijuana grow ops and that type of thing. So this one hasn't been hit nearly as bad as some of these other ones have, and you can see that it is still up quite a bit from what it was back in even mid 2020. I mean, this thing is up huge. So this is one that definitely is holding pretty well, relatively speaking, compared to the other ones that we just saw, but still not looking incredibly great. If we draw a trend line here, technically we did kind of start to break down today. Yeah, maybe not the best looking chart at this point, but you'll see here, same thing. If we start a trend line from this low in October of 2020, you'll see here that we are definitely closing below a pretty important area today, and something to consider moving forward. So that is some of the weed stocks just in honor of 420 today. One of the requests was AI. Yep, AI is getting destroyed as well. Yeah, this one's really been hit hard. I'm assuming this, I'm not familiar with this. I'm assuming this IPO'd back in December. And yeah, I mean, kind of almost hitting new lows today, or right at this, if you want to call it a triple bottom. Don't really believe in triple bottoms or triple tops. I think, after about 3 times, you generally will get a breakdown from here, but we'll have to see. This looks like a lot of other growth names out there, just absolutely getting destroyed over the last 2 months and a week or so. So if we break down through this area, I mean, I'd probably draw a trend line from this opening candle here, and you'll see if we broke down, this area below around 54 or so, maybe an area where the price bounces a little bit, and that's where you just go right click, create an alert at that line. So you're not guessing at where the price is going to bounce. You just set your alert at one of these important zones below and wait for the alert to go off, and let price action, make your decisions for you, and not emotions. So AI wouldn't say that's the strongest chart I've seen. AMD, another one that's kind of had some weird action over the last few days. This one seems to try to be bottoming a little bit. I mean, if we look at the monthly chart, this is time where we can start looking a little bit at the monthly chart. This thing's up huge over the last 4 or 5 years. So even if we pulled back, let's say, to around here, that's a pretty strong move down. That's over a 50% move down, and this would still be up huge over the last 5 years. So by no means am I saying that AMD is going that low, but this has moved up. I mean, from the 2015 lows to now, we're up 4,500%. So even if we pulled back to the 35 area, you'd still be up 1,800% over the last 4 or 5 years. So some of these names are just really overextended, and at that point, fundamentals kind of go out the window. And you've seen that with growth names. There's some great numbers on the growth name side of things, and it doesn't matter. The market is just kind of pricing in the fact that longer term rates are moving up, and that's not good for growth names who thrive off of cheap capital. So that's AMD. Let's look at the weekly. I'm just curious. I mean, there's still so much time left in the week, but yeah, I mean, I would say things start getting a little iffy when you start breaking down through this level here. Let's say around 73. So I'd definitely keep like 73 as a level to watch for price break below that area on the horizontal side of things. STPK. Star Peak Energy. Oh, I think I know this one actually. Yeah. I actually do remember this one. Yeah, I mean, it's kind of with all the other growth names, I mean, what it's down from the highs about 55%. So, you know, you're going to kind of see a recurring theme across any of these names that had absolute ridiculous moves up. I mean, if you look back in November, this was at $10 and now it's at 23. It's still up well over 100%, even though it's still down 55 from the highs that we saw in February. So, STPK is another one that, you know, is kind of, honestly kind of breaking down. I mean, if we draw a diagonal trend line from right around here, you can see that the price is definitely starting to break down. I mean, if we draw this pattern here, the symmetrical triangle is kind of breaking down here. So something to consider, just not a ton of volume on the weekly yet. So we'll see. Now, if we anchor the volume by price, just to get an idea where a majority of volume is holding from, we'll see that, you know, there's quite a bit of volume holding in this area, but also notice here that we're definitely starting to get in this void below where we don't have a lot of volume holding, you know, from around, let's say 23 all the way down to $16. So if we really started to move down through this area, you don't have a lot of liquidity here to kind of keep things from dropping further. So yeah, STPK, a liquidity gap below, let's just say that, not a lot keeping it from moving down even maybe to the 17 area. But if we, let's say, anchor a VWAP from really the start of this whole journey here back in October 2020, we're also below the anchored VWAP. So sellers are very much in control here, to say the least. Skills, this chart's going to look almost identical to, you know, the other ones out there. I mean, this is now down. Let's look at the daily here. Yeah, absolute brutal day here. Oh my gosh. Yeah. This is just not letting up at all. So now from the very highs to today's low, SKLZ is down 73%. This is definitely one of the worst performing names out of this whole growth collapse. But if we go to the weekly chart and we anchor the volume by price pretty much since, you know, the start here in May of 2020, you'll notice that something interesting, right? We just talked about this liquidity gap on STPK. Notice what just happened over the last 3 weeks on SKLZ. The price was able to move down very quickly through this area because there was not a lot of shares holding within this area from around 1275 all the way up to 1750. So this thing just continues to melt down. Now, I mean, if we were to guess possibly an area where at least price stabilizes, it would be right around here, which is right at the point of control here. So we'll have to see what happens. I mean, almost all the shares from really the start here in April are pretty much back to break even. Most shares are holding at a loss. So if this were to finally catch a little bit of some type of bounce area bid, it would probably be right around this, let's say 1175 to around 1250 zone that I have highlighted in green. TPGY, and sorry guys, I don't think I'm going to be able to get to all of these. We have about 10 minutes left. Same thing. Everybody likes the growth names. Yeah, same thing. Just, you know, what do we top out? 33. We're now at 15. This one on the weekly side of things is, you know, showing a little bit of strength. But if we go to the daily, let's see what the daily looks like here. Not horrible. I mean, but it's, you know, it's really got to prove itself here before we even look at possibly reversing. Now, the main thing is this gap below. If we turn on the gap snake, I'm not sure why this gap isn't popping up, but I mean, you still have quite a gap below to around 1180. So this gap, we're kind of trading right in the middle of this gap here. So I mean, it's hard for me to enter something that's trading in a gap and there's still downside in that gap left. The big Q here would be a breakdown below around 1440, which is this previous low here. So I would definitely keep the 1440 area in mind. Penn was actually a great case study on the raindrops yesterday. So for those that are not familiar with the raindrop charts, they are volume weighted charts. And this was a great example of being able to look at where the volume was really located in yesterday's breakdown. So if you're familiar with the balloon breakouts on TrendSpider, the inverse balloon breakout is essentially just the opposite, where you have an area where you're breaking down through support, and a lot of that volume in the candle is focused at the bottom of the range. So this was telling us that this was a pretty strong move to the downside. Just not only did we have an uptick in volume, but we also just had, a lot of that volume focused at the bottom of the range, which shows us that buyers were not willing to absorb any of that supply anywhere but the bottom of the range for that day. And we had a really strong move down after that. I mean, I think we hit a low today of around 86. So definitely quite a strong move. And you can see the same thing. I mean, a lot of that volume is at the bottom of the range. So if you were to try out TrendSpider, I'd say the raindrops are something you definitely would want to try out, because they just give you a completely different perspective on what's going on, especially when you're breaking down through support or breaking out through resistance. These raindrops will really tell you a lot about volume. Now, if we had a breakdown yesterday and this area didn't have this bulge of volume, remember, this is just the volume profile here. If this was kind of flat down here, we would have known that there wasn't a lot of volume that took place there. Instead, we do know that there was a lot of, there wasn't a lot of conviction by buyers to absorb any of that supply anywhere near the top of the day's range. And we had that really strong continuation down today. GHVI. Yeah, another one. I mean, most of these names are literally almost have the same exact chart here. Yeah, this one's been brutal. And honestly, I mean, if I were to guess, I would assume that this maybe retests this 1140 area, and then if it breaks down through there, who knows? We could see a continued move down through this the start here. I don't know if this IPO'd or if it's a SPAC or what, but if we break down through 1063, that's definitely something to keep in mind. But yeah, not what I would call the strongest of movers into into this week so far, and maybe into the rest of the week. Same thing. You've got a lot of volume at the bottom of the range here. It's something to consider when looking at this daily price action. Facebook. Yeah, we touched on Facebook already. Yes, it does have a decent hammer today, so that's definitely something to consider. It does actually look not too bad, but as I mentioned previously, I'm not sure. It seems like a lot of people are jumping on right now, so you guys may have not seen this. If I'm on the weekly chart right here, the main thing that I'm kind of looking at is the fact that if we turn on the monthly Bollinger Band and overlay it over the weekly chart, you'll see that we are starting to kind of get near the top part of this Bollinger Band, and there have been times where the price continues to melt up and the Bollinger Band just goes with price. But you'll see here that that happened really right when the market was on fire, and this was in May, and then we continued to melt up through there. But generally speaking, if you go back and look at any time the price has been in this area near the top of the monthly Bollinger Band, it has been an area where price has cooled off a little bit. You can see that here. You can see that here. So, I'm not here to say where price is going to go on Facebook. I don't know. But if we were to look at historical performance of when the price has been near the upper part of the monthly Bollinger Band, there have been some pullbacks. So take it for what it's worth. But this is definitely kind of a longer term view there. You're welcome, Hugo. Happy to mention the STPK chart. I'm shocked that that's broken down so much too. I haven't seen that in a while. Wells Fargo, WFC. Wells Fargo, let's see. Let's pull up the session candle here. Let's turn off the MTFA, turn off these anchored VWAPs, and remove everything here. So yeah, I mean, WFC, you kind of are just filling the gap from last week at this point. Now, you do have another gap below at 33, but I mean, you know, gaps don't always have to fill. It's just something to consider. But yeah, this is the gap snake is showing we have quite a few gaps below. But you know, on the monthly side of things, we're still kind of, you know, not even close to where we were in 2018, which was around 65. And some of these other names have already kind of hit highs. I think Schwab is a good example of that, where I think Schwab's already kind of made some new highs here. So if you were to look at WFC, Wells Fargo, as a laggard, you know, this may be lagging like Schwab and some of your leaders there. So yeah, Wells Fargo could be a laggard, or could just be you know, something that's not going to move like Schwab and some of these other names that have and hit some of these highs that we saw in 2018. We got about 3 minutes left, so Dmtk is one that I think a lot of people are looking at. This one has really gotten hit hard. Let's look at the weekly chart here. I mean, yeah, this thing, I mean, you have to think this thing moved up from $11 in December of 2020 and hit 83, 84. So, you know, even if this pulls back to 23, this is still going to be up over 100%. So if we were to anchor a VWAP from, let's say, this low here back in August of 2020, we're breaking down through some pretty important levels. Now, if we zoom back further, let's say that we anchor from the lows that we saw in September of 2019, you know, we're even breaking down through this anchored VWAP. So, you know, if we were simply just to look at the volume by price and see where volume is holding, we are definitely entering this kind of volume gap here where you don't have a lot of shares holding below. If you guys remember, we went over a couple charts like this where price can quickly go through this area. Now, can DMTK go all the way back down to 13 or 12? Maybe. The chart says it's possible. I don't have a position here or anything, so I don't really have any bias towards this. But anytime I see price entering this type of gap below, you know, that's something to consider, that there's not a lot of shares that would keep this from continuing down into like this vacuum below. UPS, this will be the last one we look at. Sorry, guys, running out of time here. Spencer, if you want to jump on and I'll hand it off to you. But yeah, UPS, the last one. I mean, this is one that's got relative strength. I mean, we're breaking out of these new highs. This is a pretty strong mover here. If we look at seasonality on UPS, see how seasonality is done over the last 5 years for this one. So let's look at UPS for pretty much, let's say, the last 5 years, 2016. You know, UPS doesn't have the strongest seasonality into May, only a 40% win rate over the last 5 years. But, you know, it's definitely breaking out of these new highs. And just because you have a 40% win rate in May over the last 5 years doesn't necessarily mean you're going to have a down month. You always have to take into account the technicals and what the technicals look like. And in this case, you know, UPS is definitely breaking out here. So that is all for tonight's chart roundup. I hope this was helpful. Thanks everybody for being engaged and mentioning some stocks to check out. And, you know, I can't really mention anything about specific people's positions, about calls or anything. So unfortunately, Sam, I can't answer that.
Thanks a lot, Jake. We appreciate it.
Hey, thank you. We'll talk to you guys next week.
Guys, smash the like for Jake. Trading Nomadic is starting in a moment here. Jake will hop off and so will I. and I'll be on the next stream with Trade Nomadic on in a moment.